And we get started. Okay, we're live now. So good morning, everyone, and welcome to another episode of the Crypto Hour. Now, if you have, any investments in whatever market whatsoever this week, you would have taken a keen interest in what is going on and what the developing kind of like banking crisis, would mean for everybody and for markets in particular. Now, there's quite a few things to consider today, and today is going to be kind of like an episode that is kind of like heavy in terms of looking at what what really is happening from the point of view on institutions, because at the end of the day, markets react to what institutions do and what the regulators, different central banks and governments do. So we need to look at that, what events would get them to act in certain ways, and then how what they do would affect everything else. Okay, so let me share my screen and start straight away. So can you all see my screen?
Yes, thanks.
Okay. So probably I think today we should start from this. This is just beautiful. So nothing to do with investing. I think, probably this week, if you're anybody that is investing at all, would have been better to just forget about it and think about eating something nice like this. So if you like calamari, this is an alternative recipe. Just contact me and I can pass you the link.
So is this your doing, Luca?
No, I wish it was. No, just like a website I follow, Italian cooking, a website where I get some of my ideas when I want to do something. But this is one definitely I'm going to try, because I love calamari, and but obviously frying them is not the healthiest of options. So this is a healthy option, so you can bake them instead, and it looks very interesting. So I'll definitely this is on the list. So I think tomorrow a trip to the fishmonger will provide me the fresh ingredients that I need, and then I'll try it over the weekend.
Have you tried? I mean, the big thing here is using air fryers, and I understand that it's a way to do it, and then you just don't have to use the oil, so it's a little healthier. Yeah,
we have a hair fryer, but it's not good for this. It dries them. We have tried, and it dries them too much. It's not. It doesn't. So. For me, I'm kind of quite specific in cooking, and it's not just about cooking something, but it's also about the texture and and obviously the taste. So yeah, the air fryer has been tried, and it's tried several times, but it's a no. It's good for other things, but not for this. Anyway, so let's have a look very quickly. First of all, these are the economic announcements that we had this week. I just filtered the important ones. So. We had obviously the CPI. There was the kind of big announcements of the week on Tuesday, and that came pretty much as expected. So inflation numbers, keep going down. We're going from 6.4% to 6%. This is the US we're talking about, and we can have a look later at different indicators, but pretty much they're going down across the world, simply because now we're starting to compare prices to the way the prices were after the initial, the start of the war in Ukraine that caused a lot of prices to go sharply up. So now we are comparing prices to a year ago, which is after that initial surge had already happened. Because so it wouldn't matter. It doesn't really matter too much. This is not as an effect of the government and the central bank's action, although slightly is because obviously they raise interest rates as well. But mainly because something that was going to happen anyway, as the all the money that is being printed during the pandemic is slowly being absorbed into the economy. Now on Wednesday we had the numbers like retail sales, and this is kind of like paints a different figure, like the things that carry on. So although we might see the markets and the stock market going up, etc., these are the real numbers that tells you how the economy is doing. So retail sales are going down. GDP, because this is a New Zealand figure, down 0.6%. Retail sales in the US going down. manufacturing is being quite negative. Look at this. I would be expected. These are kind of expectations, for the state of manufacturing, and is considerably worse than it was the month before. And and the retail sales keep going down month by month. So the effects on the economy are being felt, but it doesn't reflect straight away on the economic indicators and numbers. But and then we had some bullish numbers from the Australian in Australia for unemployment rate and employment change. And this is kind of like it's something I wanted to spend like a few seconds talking about, because we are seeing across the world. This is in Australia, the US, in Europe and UK, in the UK as well. Basically the economy being pretty much at almost like full employment, because numbers of below 5%, which is normally considered a normal unemployment rate number for a healthy economy. Numbers below that, it means that there are constraints on the economy, because it's difficult to attract the right amount of workers that do the jobs that you want them to do. So the issue now, funny enough, is we've been for the past 4 or 5 years in a very what is called, not I wouldn't say racist, but in a way that people have been fearing immigration. We're now going to be faced with a situation where there's going to be, I believe, there's going to be a fight to attract, qualified workers from developing economies, because the Western, developed economy already cannot produce enough workers of sufficient quality as well to sustain a growing economy. So as you can see, and this is again the unemployment claims as well from the US. The number keeps going down, but although we are at almost like record employment and lower and lower unemployment claims, what about do you think that we are now in a rosy situation? And this is kind of the worry, because the economy is pretty much working at its max power, max employment. But if you ask anybody, are they better off this year compared to where they were last year or two years ago, or they were worse off? And that's the issue, because although we are working as hard as we can, things are getting worse. Okay, and we're all feeling it in the effects on our pockets. When you go to the supermarket, when you buy something, you think, oh, this is more expensive than it was before. And yes, I am in full-time work, but there are many families that have got 2 full-time income and still only just about manage to make ends meet. There was a statistic that was published a couple of weeks ago, and that shows that 57% of the US population couldn't handle an extra $1,000 demand on their income. So by taxes going up or prices going up, they would be they would go in the red basically if their outgoings were to go up by $1,000 a year. So that tells you pretty much what the state of the economy is. But let's have a look at what.
Sorry, look, I was just going to ask a question. Are you thinking that really all around the world there's so many shortages? I mean, even in New Zealand, to bring workers in, or you just think there's pretty much there's almost a worker shortage? Because I mean, we need teachers, we need some skilled laborers and some other things, for construction and others. It's just, where are you going to get the workers from?
It's exactly that. I mean, this is what I'm saying. It's funny because I've been in the UK, obviously, and this B word, if I can mention the B word, the Brexit. So everybody's been talking about, we need jobs for our people. We don't have enough to give to everybody else, and so on. So kick people out, stop the boats, and all this is kind of all this very, very, I would say almost toxic discourse has been going on everywhere on the radio, on the newspapers, everywhere. But really, if you think about it, how did the UK, for example, become a big economic power in the world? And I'm not afraid of saying it. It became strong by with the Industrial Revolution, yes, but also with slavery. and attracting a lot of, because of the Commonwealth as well, being a big power in the world, and attracting workers from all across the world. I mean, if you look in the UK, look in any hospital, you'd be really hard pressed to find English people doing the being nurses, doing normal sort kind of jobs around the hospital, because there aren't enough people to go around, especially qualified. So the successful economies are the ones that can attract and integrate foreign workers into their economy, because all Western countries have declining birth rates. So, and especially you have declining birth rates. So this is the new blood coming in. And then you have also an increasing lifespan. So we have a lot of people that go into like pension age and being replaced by whom? Because there aren't, so the more people getting into enjoying the pension, there are new workers providing, funds for those pensions in a way, in countries where the pension is not, say, backed by anything, but is only backed by, the taxes of new people that are working. So obviously you need somebody to do certain jobs, and you need to attract them. And if you can say what's been the most successful economy of recent times, really across the world, probably has been Germany. Okay, and you look at Germany, look at what they do. Look at, for example, during the crisis, that went on with the Arab, uprising, and the crisis in Syria and so on. Germany has been the country that has taken in most, refugees, and they have not only attracted them and they only made them feel welcome, but they have provided jobs for them, and they have included them into their economy straight away. And that's compared to other countries that instead of fighting and trying to stop people coming in, and then finding the shortages because they can't get enough people doing what they need. I mean, I'll just give you an example. In London, for example, in the UK, obviously London is a big business for construction, because there's so many offices and always like skyscrapers going up and so on. Now, construction workers, I'm talking about, bricklayers, people that can do building works, are now worth their weight in gold. Their daily rates have gone up more than 50% during the past 2 years. And this is not because they are better at what they do than they were 2 years ago, but simply because there is so much demand for them, and they can find that if they leave one job because somebody doesn't want to pay them well, they find another one tomorrow that pays them 10%, 20% more. So, you could get a bricklayer a couple of years ago for about £150 a day. Now it will cost you £250 for the same person to do the same things, work the same hours. So all these things are just an indicators of where the stresses are in certain economies. And you're perfectly right. Australia and New Zealand have had very careful about immigration. But then one thing is very careful in controlling the numbers. But another thing, then you might have problems that you say you need teachers, you need nurses, you need doctors. Where do you get them from? How do you attract them to your country? Because there are many other countries that are doing exactly the same. The UK has got a shortage of, for example, of doctors and nurses. And, where do you get them from? There is an influx. There's been the past few years an incredible influx of nurses from the Philippines, for example. But that is also, in a way, carrying on the colonialism, because you are draining developing economies with you are draining them of qualified workers. So it costs a country quite a lot of money to develop a doctor, to develop a nurse, to develop some a qualified worker. If you, at the end of that process, you take them away, so that means that those workers cannot contribute to the economy that raised them. And although it might be good, and say now a doctor from whatever, India or the Philippines or somewhere else is now working in the UK, that means that country has one less doctor, to do what they need to do, and to actually look after the countries that actually got a birth rate that is very healthy, and they have got like a growing population. now is stealing their workers. So it's a difficult thing, and I mean, I would like to see, personally, I would like to see this going on with a with a bit more grace. Let's being a bit more thankful that we have got healthy economies that can attract other cultures and other workers, and create the conditions where everybody can thrive without trying to raise raise walls and like Trumpian style, to stop the plebs coming in and stealing our turnips. I personally see that to create the conditions so there is a lot of work, and this work needs workers, and the workers are given a pathway to come in, and they're encouraged to come and work here. So that would be for me the frontier in the next decade. How can developed countries attract the kind of immigration, the kind of workers that they want, without opening their doors completely, because there's always going to be a part of society that is actually getting stronger, and that is very defensive of their privileges, and they don't want to lose it to anybody coming in. But anyway, we digressing a little bit. Let me go into just first of all quickly to show you what is going on these past few days, and it's a strange tale. This is the S&P 500. So I mean, this is only a daily chart, so it doesn't tell you too much of a tale of what's going on. But this is where we started having the banking problem. You can see a sharp sell-off here from 4,050 to we've gone down to 3,800. So a 5% drop in a week is very significant. And then there has been kind of like a bounce since that, taking us back to similar levels where we were before. But here you can see maybe it's a bit more significant because these are 4 hour sessions for each candle. You can see what steep drops we've had, from starting from the 7th, and this is the more recent drop, last Thursday, and this is where it started on Monday. Look at this. Look at what huge drop we had on Monday, and then the markets recovered because we had intervention. Intervention from the authorities, bailing out pretty much the largest bank failure since Merrill Lynch. So this is no other way of putting it. They will do everything to not call it a bailout. Okay, so it's funny because they're saying that the reason why they got into SVB and Silvergate Bank now is not because the banks were failing, but because of bad management. So as if the regulator would just come in and take over a bank that's not doing the job properly. Anyway, so this has been what's happening with the stock markets in the US, and some of them have reacted in different ways. So this is the S&P 500. The one that has probably suffered more than everybody else is the Russell. Oh, where is it? This is the Russell 2000, which is an index of the 2,000 companies, where the S&P 500 obviously is 500. So you can see what sharp drop we had since last Friday. It's quite significant 1 week move, going up to 11% at one point. At the moment, we're sitting at about 8%. Okay, so not bad if you're invested in American small cap stock. 8% wiped off the value of the index in general. So in there you have companies that have dropped 50%, and companies that have grown very few. But just to show you how bloody it has been this week. And obviously the banks are the one that have taken a beating. So this is the XLF, which is an ETF that invests, basically it's a financial sector ETF. So see what happens as well. Where everybody was panicking and selling off the banks. even where there are some things in there, some things in the indices that have got not much to do with what is going on right now, and they are very well run, very well capitalized company. They're still involved in this drop. So this is almost like 15%. Okay, 15% drop in a week again, from what is considered one of the strongest sectors, generally speaking, historically. So we are sitting now at 11.6% drop for the week. Okay, let's put things into perspective. And by the way, why should you care about this? Because this is obviously this is an American fund, and the biggest, as I said, we're talking about last week. For example, one of the biggest parts of this are JP Morgan, Berkshire Hathaway, Charles Schwab, which is not a bank, but it's more like a broker. They're being pummeled, absolutely. And why should you care about this? Because if you have a pension, this is going to be a big part of your pension. Okay, everywhere in the world, doesn't matter where you live. Okay, so your pension will be invested in this. Okay, because that's how things go. So yeah, part of your pension, and then maybe only, I don't know, 20-25% of your pension, would have experienced a drop of roughly about 10%. Okay, so unfortunately, even if you say, oh, I don't care about this thing, it don't affect me, well, they do. They do, because not directly, maybe, if you're not, if you haven't invested in the US market and banking in particular, but indirectly it does. And this is kind of starting to show now the contagion. And that's the last of the charts. Okay, this is gold. So this is again the daily chart. Let's bring it back to 4 hours. So when there is uncertainty in the markets, then obviously people go to the safe haven assets. Okay, which generally speaking for the currencies are mainly the US dollar and the yen. And obviously for not currency related commodities, we're talking about gold mainly as a store of value, and people are thinking, well, I'm safe with gold, so obviously price goes up. So we went up from, again, about not quite 10%, but if we look at what's happening just in the last week. So at the moment we're sitting about 5%. Okay, so if we actually look from here, the bottom was middle of last week on Wednesday, gone up 6%, and sitting at about 6% at the moment. Okay, so this is what happened in the market, and let's try and understand what is happening. Wait a minute. Let's go back. Now, one question I had for you. So look, and this is a lot of the crisis that has gone on this week has been about banking. Okay, and a lot of it goes down to regulation, because what happened after the 2008 crisis, the banks were required then to keep a larger portion of the assets under management in liquid assets, so we could avoid kind of bank runs as we've seen in 2008. So what banks do with these liquid assets, because obviously banks are in the business of making money, and if they need to keep a lot of deposits in the coffers, they need to do something with that, because they don't just want to keep them there and basically pay interest to depositors and not make any money on them. So what most banks do, they invest in interest-bearing liquid assets like bonds. Okay, now the problem with this is, not the problem, bonds, obviously you lock your money away by buying the bond. That gives you a certain rate of interest, and the rate of interest is fixed. So you might buy in a bond with, I don't know, 5 years, 10 years maturity at, that gives an interest of 3%, 4%, 5%. So that interest is fixed. And the bond obviously is quoted on the markets, and you can buy and sell it to other people if you want. So what happens is that, the bond has got a price, and let's say that you bought a bond for, that gives an interest 3% for the next 10 years. What happens is that, and that you bought that bond, let's say, at face value of 100. Okay, if the interest rates go below 3%. Okay, because it kind of like things that they need to stimulate the economy, so the interest rates go down. Do you think that that bond would be more or less valuable? Question, I need an answer. I can't read the chat, unfortunately, for some reason on this computer.
More.
It'd be worth more, obviously. Okay, and if the interest rates go up, the same thing, the bond will be worth less, because why would you go and buy a bond that gives 3% where you can buy another one that gives maybe 5% now that the interest rates have gone up? So the price of the bond, if you want to sell it, goes up or down depending on interest rates and what expectations about interest rates are. Okay, and this is what is causing an issue with banks. What many banks do, and what is known to mitigate this risk, is that they have to hedge. So they do interest rate swaps. So they exchange then, somebody that wants to buy that fixed interest from them, in exchange for so they can get like basically the difference between the interest rate swap and the bond rate of interest, and they make a little bit of profit on that. But at the same time, whatever happens to the interest rate markets, that doesn't really affect them, because they have hedged. So if one goes up, the other one goes down, and so on. And so their position remains I would say, fixed in time, and they get that like they do with the difference in deposits. They give you an interest rates and they charge a higher interest rate to their depositors, so they make that difference is their profits. The same with this. Now, then we need to go now into regulations, because there's a lot of this crisis has got to do like the way that the US asks banks to report the evaluation of the bonds on the balance sheet. Now, and this is the question I wanted to ask you. What do you think is, in terms of assets under management, what do you think should be classified as a small bank? So it's a bank that has got maybe $1 billion in under management in deposit. There's got 100 billion, 200 billions, 1 trillion. What do you think would be the classification for a small bank? And this is quite interesting. So I'll take guesses. What the US considers a small bank?
50 billion.
50 billion? No, you're far away.
100 billion.
You're still far away.
500 billion.
Well, that's a bit too much now. So you're in between. So 250 billion. So under 250 billion, the US classifies banks as small banks. And this is kind of, for me, is absolutely nuts, because to make a comparison, a 249 billion bank, which is considered by the US as a small bank, would be number 3 in Germany. Okay, and this is why is this significant? Is because the basically the regulations for a small bank, for a bank under 250 billion, is a lot less than for a large bank. So there are certain rules that big banks need to adhere to that are not applied to small banks. Okay, so I was saying top 3 German bank has a balance sheet of less than 200 billion. Okay, this is the top 3 bank in Germany. So let alone in other European countries, they're much smaller than Germany. So now the banks can hold the bonds, and this we're talking about the US, in 2 ways on their balance sheet. They can list them as available for sale, or they can list them as held to maturity. Okay. Now, if they hold them to maturity, they don't have to basically report the loss of value. Okay. But the problem is that they are disincentivized by the accounting standard to hedge the interest rate risks with the bonds, they are classified as held to maturity. So basically, most banks in the US now are exposed to that because they don't hedge the bonds they are held to maturity. So then basically you're saying, well, if the reason is this, because they're saying, if I buy a bond and I'm happy to hold it for the whole duration, I will get my capital back plus the interest that has been agreed on the bond. So it doesn't really matter what what the difference in price of the bond is, because I'm not planning to sell it. I just want to hold it until it expires and then get the capital back. And in the meantime, they pay me my coupon, whatever it is, every month, every quarter. Okay, but the problem is that what happens is that what happens if a bank needs liquidity, like the two banks there, Silvergate Bank and the Silicon Valley Bank. They will need to. So there are people there withdrawing money for them, and this is not talking about people like you and me, but also companies and so on. They will need them to give them their money back. So the only way that they can do that, because banks don't have money, whatever you might think, they don't have money really. They're barely about 10% of what people give them as deposit, they're available to pay people back. So if there is a run in the bank, there's no bank in the world that will be able to to pay everybody the money that they've deposited. So just not going to happen. So what is happening though in these cases, even there's a small bank run, so people may be asked to withdraw like 20% of the deposits. That means that the bank like this need to sell their assets to pay the depositors. And what they do when they sell the assets, they need to sell these bonds, okay, even if they are marked as held to maturity, at current value. And the current value, especially with bonds that when the interest rates have been close to zero for about a decade, the interest rate and the bond yields have gone up recently, from very low levels to about to over 5%. Then those bonds are worth very little. And so what happens then? We don't have, these banks are not covered. They can't have enough liquidity to carry on operating. And this is what the problems they are arising. And this is not just interesting for now, but is interesting for what the Fed is going to do going forward. So these US banks are disincentivized to do any hedging for the bonds that are held to maturity, and also there's no interest rate risk stress testing. I mean, this is unbelievable. I mean, this is honestly out of this world. Now in Europe, this couldn't happen, okay, because there is a lot of stress testing. So when and these are talking about central banks when they test regional banks or multinational banks. You have to provide documents that show you, okay, what happens to your balance sheet if interest rates in the euro go from 1% to 2% to 3% to 4%. Are you going to be all right in all those environments? And obviously it's a normal part of running a bank, because running a bank should be secured in all circumstances. Okay, and this is what, although it is, there is this framework in Europe for stress testing, and every bank that fails this is put under strong guidelines in Europe. Okay, and having had that issue in the US, there is no interest rate risk stress testing. So what is happening right now is that many banks are exposed to this kind of risk now, because they have to hold about 20% liquid assets on the balance sheet, and most of these liquid assets are in bonds. If they are not hedged and the interest rates keep going up, what do you think is going to do to not just this? There's now 3 banks that have been involved in this, because the last one was, I'll talk about it in a second, was First Republic Bank. So already in a week, we've had basically 3 banks going down. Okay, call it whatever you want, one way or another, but 3 banks having to go back to, to the market or to the authorities to say, look, we don't have enough to carry on. Either we need new funds or we need a bailout. Okay. So this is really, really bad. Okay. So there is no stress testing to overall interest rates risks. So the question then is, how do we know which US and European banks are really vulnerable? And that's the kind of like the big question that we have going forward. Now, what's one of the things that has affected have been affected by these bank problems are the expectation for interest rate rises. Now, where before everybody was expecting for a 50 basis point raise, so half a percentage increase at the next meeting of the Fed. Now, as you can see, almost nobody expects that. Most people now are expecting a 25 basis point increase. I mean, this is kind of like 84% expectation, for that. And there is also, 15%, the other 15% expects for rates to just being kept what they are. Okay, nobody expects for, as you can see, there's kind of like at the moment, there is a 0% probability at the moment, at least for people back with their money more than anything else, of the rate being increased by 0.5%. So the consensus is for 0.25% now, where a week ago was 50. So this was reversed, this statistics here. Okay. Now, problems. These are, credit default swaps. So basically, are just kind of like insurances against any major, any country in the world. You can buy this credit default swap against the possibility of them defaulting on their debt. Okay, and you can see, this. I mean, they're still small in percent, in percentage terms. Okay, but still, you can see the cost over the last month has gone up 90% in Germany, 48% in Japan, 17% in the United States, and these are the second columns is over the last 6 months. Okay, so over the last 6 months, some countries have reduced the cost of the default swaps. I mean, in particular, United Kingdom, and this is kind of like a way almost like to take out of the statistics because it was looking at the situation, the previous government, there was a disaster. But this is the cost over the last 6 months. So Japan, United States, Canada, and China. This is a marked increase on the cost of buying a default swaps in against the debt. And this is the third column is the implied probability of something like this happening. So we're still talking about small percentage, but you would say like strong economies, China, Greece, Italy, they have between 1% and 2% probability, which is statistically significant, for defaulting on the on the debt. And this is also the difference between the interest that countries have to pay on the 10-year bonds, compared to other countries. Okay, so if you look at it in a way, so in Japan, for example, it will cost you about 2% less. In a way, you can see for the government, this is the rate at which governments borrow money. Okay, so in Japan, the government borrows money at 0.3%. In Germany, at 2.2%. And so on. So these are the rates. So in a way, and it's showing a differential as well. So in Germany, I can say it costs more than 1% less to borrow than it does in the US, and again 1% less in Australia. So it tells you, going forward, which countries have a better potential of developing more long-term investments are the ones that got lower costs, because investing costs money, and this is driven by this kind of returns. So this is why I'm telling you that these things matter to then the economy and to the companies that are going around the daily business, and companies need funding. The funding for those companies is going up as these yields go up. As simple as that. And so they can, if they have to pay more to finance their debt, they can spend more to invest. And so then that has a ripple effect going forward. Okay, moving on. I said, what we have another look at is the effect of this on crypto. So the last chart of the day. So here we see, obviously, as the markets were panicking, and again, this was last weekend, okay, Friday the price went down because everybody went mad and everything was going down. But then at the weekend you can see crypto started going up, and on Monday it actually started growing quite strongly. And as everybody else was incurring having problems, you see the Bitcoin now is gone up like 33% in a week, which is phenomenal at that point of view. But also is interesting to see how it is now probably seen as a safe haven, when people don't know now what is safe and secure. So if you look at the things that have increased in value, obviously when people are in trouble, look for safety. And this is, I'm not saying that it is or it isn't, but this kind of like narrative now is starting to get ingrained in people's mind that actually while everything else goes to pot, Bitcoin doesn't. And whenever there's a huge shift like this, obviously they all go to safe assets. So you will have seen that Bitcoin would have gone up a lot more than altcoins, for example, because at the moment people go for safety. They don't go for risk, they go for safety. So within the crypto industry, the safest asset that is seen is Bitcoin itself. So this is why we have seen a huge increase. What we're doing, so we seem to have now closed. We had a daily, this is today, so there's been a big jump as well today, but we still haven't closed. And see, there is, so the day they closed, for those of you that don't know about candle charting, the top of a green candle, the top of the thick part of the body, not the thin line, is the close of the day. Okay, these are daily candles. So we still haven't closed above this huge range that we've been in since, you can see, since June. So this has been the the range between, which is quite large, but we've been into this going sideways in this range, up and down, and now is the first time that actually we're trying to break through it. So we have broken through it, but it didn't quite last. So you can see the price snap back within this green box. So we'll see. Let's see if today we can close above this, or if price will retrace. But today, what is going on as well? There is its options is Bitcoin options day, and so the close of this candle will determine, how many people lose money. Let's put it that way. How many people make money? Because people that have been bearish, at the end of today, they will have to settle their option contract, because it's the end of the option period. So the option contracts are depending on which range Bitcoin ends in, and this is going to be it's not going to be today, and then those contracts will be settled. And obviously it's not a good time for people that shorted Bitcoin, as you can see. And it will be interesting to see what happens today, because there should be some kind of like selling pressure going on from people that are panicking, if they have got any funds left, to try and push this price down, so that they don't lose talking about millions, about 400-500 millions today that could be lost by people that have bearish bets in the options market. Okay. This is interesting. Like we're showing you the top fiat currency by market capitalization. Okay, so this is, keep looking to see where's Bitcoin in that list. So Bitcoin now is going. Last week was number, I think, 27. This week with the rise in price is gone to number 24. So if Bitcoin was a country, its currency would be the 24th in the world, and we're just close to, you know, Israel and I think this is the Malaysia, and it could overtake these with a little push up in price. Quite impressive for something that's been going for, you know, less than 15 years. So it's have a look at it if you're interested. It's called fiatmarketcap.com, and it's a bit of fun, to be honest with you, but it just puts put things into perspective as well, and it makes you realize what the size of the major economies is as well. Okay, now a few things about crypto. Now, the thing to be careful of, you know, as usual in crypto, there is as more people are getting into the crypto world, there are more scams going on, more fraud going on. And the thing that was reported by this is that the scammers are becoming more sophisticated. So they are kind of like targeting custodial accounts of financial institutions or cryptocurrency exchange accounts. So we have been trying to entice people to send funds directly to cryptocurrency platforms, where then, you know, those funds are quickly moved off the platform and disappear forever. So be careful out there. And if, you know, one word of warning, as I say, in periods like this, you know, it's, you know, where we are in this kind of like a changing period in between one set of I would say system and another, because I believe we are around that time now where it's starting to be talked about if we should ingrain, you know, these new cryptocurrencies, new digital system into the world economy. There's no need to go and look for stars. You just concentrate on the basics. Okay, the big companies or the big projects in the cryptocurrency world would provide very well for you, with a level of safety that simply is not there for smaller projects. Okay, so be very careful about getting in things because you heard your friends that talked about this coin or that coin. I would say just be careful. Okay, this is not financial advice, but just watch out. Okay, obviously we couldn't do a session without talking about Cardano. And again, you know, yes, I am an investor in Cardano, by the way, but I'm not talking about this because I want to, you know, shield my coin, so to speak, simply because I really do believe in the project and I think it's amazing. What we are seeing recently, we're seeing here growing institutional investor interest, and this you do it by looking at the kind of number of what is called like whale accounts, so large accounts, and you can see these things on data. So the volume of large ADA transaction, ADA is the token for Cardano, exceeding at $100,000 on the Cardano network is on the rise, and we can see by this this graph here. So that is showing you how large investors are now taking more of an interest as well in Cardano, and you know, just take it for what it is. I'm not saying price is going up or price. No, we never talk about price. We're talking about the things behind the price that could cause price to move. Okay. Now this is the third, let's say, bank. Again, as I've received a bailout basically from several banks like Bank of America, Citigroup, JP Morgan, and Wells Fargo. They were basically contributing $5 billion each, with a deposit into First Republic Bank. I mean, obviously, these banks, by the way, they're not doing it for the love of their competitors, but simply because they know that this is like a snowball effect. And if they don't stem it right now, this could get to something really, really ugly. So at the moment, we still, we still have to see how these ripple effects developed. Who's going to be, who's going to fail? We got this problem. 3 banks in the US. We had in Europe. We have the Credit Suisse as well. There's been again has received support by the Swiss central bank, but it's really a difficult time right now for the banking sector, because now they're all interlinked. There's not like one bank you can look in isolation, but one bank will have debt that is owned by other banks and so on. So this is why it causes this ripple effect. Similar way that the FTX disaster then affected many different crypto projects that got nothing really to do with FTX as such as a project, but obviously they had their funds with them, and so then it affected them too. So now we are talking about what's the difference now between, for example, problems in stable coins that we have seen as these issues with the banking have caused also a depegging, a temporary depegging of the USDC stablecoin. Now, and we see the difference of approach where crypto and stablecoins and so on and the rest of crypto has to deal with things with market forces, because no support has come from any sides. Okay, and the difference between the banking sector that is receiving bailouts. So the problem is with the system, like crypto, they are completely market-based, are quite painful to go through certain phases, but at the same time, the markets get stronger on the other side, because they have to, to carry on and to attract investors and so on, they have to deal with these issues. And so, yes, it is painful and things go down for a period because, people are not happy and there are problems that are highlighted by this crisis. But at the end of the day, this problem cause actors to change the game and create better systems, better products, so on. So it's almost like I say, yes, it's a bad thing because something bad happens, but it's also a good thing because that forces people to take action. What's happening in the banking sector instead is the complete opposite. It's almost saying, well, you haven't managed your bank properly, but don't worry, we'll look after it for you. We'll make sure that nobody loses out. And that's yes, although it reassures the market, because obviously if you have money with those banks, you would have been panicking. It reassures the market from that point of view, but from another point of view, you're not dealing with the issues of their underpinning the reason why these banks are having problems. And so going forward, I just want to open your eyes a little bit. So yes, there is this FDIC protection, in the US where your money is protected up to $250,000. But still, other banks, how safe are the banks? It's always considered like safe receptacle for your money, somebody that can look after your value. And this is the why also Bitcoin is starting to be considered actually as one place where the government and the market forces can get to if you have custody of your own Bitcoin, because of the limited numbers that there are in circulation, and because you all control over these things. Nobody can really force them from your hands. So it's interesting how we are starting to kind of understand what the whole Bitcoin project and then all the cryptocurrency industry that was born on the back of it and was trying to do in the first place. And we're talking about like more like the philosophy of why Bitcoin was created and the other cryptocurrencies were created, the decentralization, why the original founders thought that was important. And you're getting to realize it now, and people I think are starting to get it, although Bitcoin pioneers and crypto pioneers, of which you might well be one if you're investing in crypto, by the way, because still most of the population is not involved in cryptocurrency. this is why they bought into crypto in the first place, because it's something that cannot be controlled by a third party that tells you how much your value is worth, and where you have control of it entirely, and can hold in safety without anybody else affecting your holdings. Okay, so this is kind of the we don't have time to go into this, but this is the options level that we're talking about before. So depending on where we finish today, will determine basically how many people lose their funds, the people that were bearish. So the higher the level it closes today, the more people will lose their money. So we're talking about between 25,500 and 26,000. There are almost like 440 million that would that would be lost by people on with bearish bets. Oh, that's the other thing. It's interesting. Like there are, how many things there are now on YouTube today talking about crypto here and things that are being promoted by crypto. What you can see generally when there are YouTube, because there are some really good channels, but this was pretty much the biggest channel in YouTube for crypto, and but it failed to disclose that he actually was benefiting from promoting FTX, for example, with affiliate links. So you also have to be careful, because there are many influencers that are trying to promote projects so that they can, because the project are directly either because they get affiliate income, or because they are directly invested into those projects and are trying people to buy them so that they can make money. And this is kind of, by the way, it's not new to crypto, because this is what generally brokerages do. When there are those announcements that say, this company is being upgraded, or this company is being downgraded, that's a buy. So when JP Morgan or something like that says, okay, we think that, I don't know, the Coca-Cola shares are a buy right now, that generally is because they want to sell their position. So they're looking for buyers to sell their shares to, because they know that the price is going down. And this is kind of like a little bit of a scam, and it is quite bad actually, because the financial industry is a huge scam that is allowed to exist. And this is some of the reasons why crypto at the moment is being fought so hard, because people realize that crypto in general, it's a risk to profits. Yeah, if people can do better without using a bank, without using, for example, the credit card system, and you function by charging people lots of money to use your credit card, then it will affect a bank's profits. Okay. Other things, just the last thing, so we don't have any more time to get into the point of it. There's a couple of things. First of all, we're talking last week that the Department of Justice was appealing at Binance buying the Voyager assets. Now, the judge denied their appeal because they say that the appeal would harm Voyager's customers waiting to receive their funds. So this is quite interesting now, because, and this is why it's so important to have a judiciary that is separate from the executive arm of government, because we need somebody to uphold the law and look after the the rule of law. And authorities cannot just do what they want because they want to. They need to adhere to laws as well. So that was quite interesting. And the last thing as well, kind of like a new idea. This is a Swiss bank called Grow Bank. It's a new venture, and they are looking to integrate traditional finance and crypto for these services. So they will have, where is the so they are, by the way, they have an e-money and classical banking license. Okay, and also the users are enjoying the cover under Swiss law. Okay, now where is the number of things? So they had about 70 currencies and about 20 cryptocurrencies that people would be allowed to use and swap on the platform with minimal cost. So where is the number? Oh, yeah, there you are. 64 fiat currencies and 20 cryptocurrencies. Okay, so they will be allowed to swap fiat with crypto with very little commission. So it's why again am I showing you this? It's so important to see the difference between countries like the US at the moment. They is being very defensive of the system, okay, the banking system, because just think about it. You know, players with money are those that are financing the politicians to be elected. It costs a lot of money to win an election in the US. This money must come from somewhere. So in a way, it creates almost like paymasters, the sponsor of our politicians. So once they're in power, these people want their investment back, want a return for their investments. So if they put people in power, they want them to protect their interests. Okay. And so it's interesting, like in the US, this is happening, and in other countries as well, partly in the UK as well. But in other countries, you know, like Switzerland, there are these new systems that are growing, and it's being encouraged basically to use cryptocurrency as well, because they realize that this is the future. So we're starting to see examples like this that are now making easier this transition between fiat currency and crypto, because at the end of the day, you know, fiat currencies are not owned by government. You know, it's something that we use to exchange our value. So we should be able to do whatever we want once we've earned our money and we paid our taxes. We're not talking about anything illegal here, but without discretionary spending, we should be able to hold it in any which way we want. And so it doesn't make sense to me, at least, that this fight against banks enabling crypto transactions, because I think it's got nothing to do with them. The moment that we have, you know, let's say, filtered our work through the country that we work in, and we work, we pay our taxes, etc., etc. You know, what's left at the end, we should be able to do whatever we want with. You know, and it's interesting. What I mean, the fallback for me from all this, if it carries on, if we see the US becoming more and more restrictive about cryptocurrencies, for example, we would see that all this extra business would be then taken by other countries in the world. Obviously, Switzerland is at the forefront of this, and so are some other European countries. There are also, you know, smaller countries like Singapore and so on. They are making this easier, this transition easier to happen. Okay, so I think this is what the last thing of the day, and I've really overrun today because there was a lot to talk about. Let me stop sharing. So a couple of things, and I'll take 2 or 3 questions, no problem. And the one thing I want to remind you again is Jonathan runs a Cardano-based session at 9:30 every Friday following this one. So Jonathan, please put the link in the chat box, and I would encourage everybody to go and follow it, because if you're interested in crypto, then Cardano is at the, you know, at the top at the top of the tree there as one of the main players in that. So you want to really understand what's going on, not just on what you read on the news, but what's going on in one particular ecosystems, then it's a great place to be for an hour. Okay, so anybody has any questions to ask, please?
Luca, I think there are 2 questions in the chat box.
Okay, yeah.
One is from Archie and another one is from Jeff.
For some reason, on this new computer, I can't open the chat box when I am sharing. Okay, what's the question?
Can you see, or shall I read for you?
Yeah, no, I can see now. I can't do it while I'm sharing. When I'm sharing my screen, I can't open the chat box. So the problem with all the banks is being liquidity and this mark of the you know, marking their assets. So as you know, it's like a snowball effect for everybody. As there are rumors that a bank might have problems with liquidity. What is the normal thing is that the people are withdrawing their deposits, and I'm not talking about individuals. I'm talking about institutions that have they do that at multiple billions at a time. Okay, so in the end, they need some extra. I'm not saying liquidity. They need some extra capital to maintain certain ratios. Otherwise, they will stop them operating. So, and the problem with Credit Suisse, and we don't know if this is, it's ended at the moment because they received a bailout as well, but we don't know if that will be enough. The problem with Credit Suisse is that we're talking about their main shareholder, which is Middle Eastern, has actually refused to produce more capital. Say no more, please. And so that's well, if they don't, what does it say about how much trust do they have in the in the bank itself? So that's been the news that actually spurred all the thing, because the fact that there are some liquidity issues, I mean, it's not new. To this bank, or generally speaking, it's not the first time it happens. But when you get so publicly that your main shareholders refuses to input any more capital, then it becomes a little bit more serious.
Luca, instead of the Russian question, can I just ask, do you think that Bitcoin is starting to decouple from the main stock market, the S&P, as it seems like there was a lot more money going into Bitcoin in the last week rather than going back to the stock market?
Well, yeah, but it's not. I mean, this is what I'm hoping for. What everybody hopes for. They're thinking about actually, yeah, because we all believe in this. Kind of deep banking, and like Bitcoin can be and crypto can be an alternative financial system. But it remains to be seen. It's you can't really say on a week's worth of data. Obviously, if you had money in the US, just put yourself in that position, and you had money in any bank, and you see that there's bank share prices and everything is actually going down, going down day by day, and you are worried about the value of your of your deposits. And what would you do? Where would you put your money?
Well,
that's
hard having gold, isn't it? So it's
yeah. So that's one of the options is that So it could be Bitcoin, it could be gold, but obviously you need to find somewhere to put it, to hold it. And there have been a lot of money was moved into yens, for example, this week. A lot of people get just held in US dollars. So that's the question. Yes, it's interesting to see that while everything else is going down, Bitcoin is starting to be seen as a safe haven. But whether it's completely decoupled or not, I mean, it remains time will tell. I mean, personally, I think that at the end of the day, the money to get Bitcoin's price to rise must come from somewhere. So as the economic conditions are still bad and getting worse, so people have to pay more money on the mortgage, they simply have got less money to buy other things, and crypto is one of the other things that you buy with it. So for me, the biggest fallout of this thing, the banking crisis, is that may cause the Fed to actually change its policy on interest rate rises.
Yeah.
And probably if that's going to happen, we will see probably a big boom in risk assets, which includes this is why probably we're seeing this week the Nasdaq reacting better than other stock indexes, for example, because they got a bigger number of risk assets, okay, technology shares and so on. So so that we will see what happens. Now, Clinton, you're saying that we've reached a waste, crypto saying that we have reached the 3-year bottom of. People have been talking about this for the past 12 to 6 months, really. everybody saying, yes, we have reached the bottom, and then we hit a new one, and then we hit a new one. Is, your guess is as good as mine, to be honest with you. But whether, I was saying, I've been telling this for months, nobody can guess the bottom. But I would say, in the meantime, start buying some, guys. Don't wait too long to be involved in crypto, because you've been given an amazing opportunity. Because everybody thought that in 2021 the price of crypto had taken off. Now we're going back to pre-2021 price levels. So there's still, even at this price, even Bitcoin having gone up 30%, it's still cheap in historic terms. So I would say, I don't know, because it's literally speaking, you can see the situation in the economy will get worse before getting better. Now, what will that do to the price of crypto? It's a bit of a guess at the moment, but it's, I would like to think that we reach the price, the bottom, because we are, looking forward. If we look to about a year's time, we're going to have the next Bitcoin halving event next year. So in January, that is a time where there is a boom in crypto prices, because again, it's just supply and demand. So the supply will reduce, supply of new Bitcoins coming into the market, and demand seems to be going up. Demand for block space has kept going up, and that's what gets the prices to rise. So it will happen at some stage, and personally, I don't think it will be that long before we see Bitcoin in 6 figures. So I would personally start. I am fully invested in crypto anyway. I've been for a while, but if you're not, and you're thinking of dipping your toes in, say don't wait months. Yes, prices could go down from here, and we have been ranging. So I think a lot of it will depend as well with where we close today, to see if we can get to the next level, to about the 28 to 32,000 level, which is the next ranging zone where price was was for several weeks, or if we fall back into this area, and then if we have a close today or below 26,000, probably we might have a retracement going back towards the 23, 22 area. But if we close above that, then we might see a leg up that takes us to the next level, and maybe go into the 28 to 30 area next week. But at the moment, with so much going on in terms of announcements about governments shoring the banking system and so on, it is difficult to predict anything, because at any stage, this is not announcement that are planned. At any stage, Jerome Powell could come out and give a speech that would change everything. So be very careful in whatever you decide to do. But I'm thinking, many people have been, dollar cost averaging in crypto now for a few months. And if you started doing when Bitcoin was below 20,000, then you would have done okay for yourself. And in future, looking at the future, I think that it would be very difficult to go back to those levels. We might dip into it in the short term, but from the end of this year, beginning of next year, I don't think we'll see those price levels again. Okay. What time for one last question, and then we close. Anybody?
Yeah, Luca, just on something completely different with regard to Ledger. My computer is still on Windows 7, so I can't open a Ledger because it needs Windows 10 or above. Can it be used on Apple?
Yes, you can. I've got my Ledger. Yeah, you can download the Ledger app on on an Apple computer. Yeah.
Right. So it doesn't require a particular operating system level, does it?
No. Not there. No, I've got it on a 2015 iMac. So it's unless I don't know how what system will go back to. If you look at Ledger, they will give you minimum specifications. Okay.
Yeah, right.
Ledger.com.
Okay, thanks.
No problem. Okay. Anybody else? Are you okay? Numis Miko Paul, this is not, it's not a rabbit hole we want to go into today. That will be another discussion altogether. Okay.
No worries, Luca.
No problem. We can discuss it on Monday if you want. Bring it up on Monday. Okay. Okay. Oh, the other last question I can see. What does the 100% for Russia mean regarding chance of default? I mean, Russia has defaulted. Has be technically defaulted, but part of it was because they wanted to pay their debt in ruble, and the contract said that they had to pay them in other currencies. So Russia technically has defaulted. That's why it says 100%, because they already are in default.
Thank you.
Okay, no problem. All right, so I will close the call here. Remember, Jonathan, did you post the link? Yeah, fantastic. Okay, so just follow you. It's today is like 9:15, 9:17. So you got 10 minutes to go and make yourself a cup of tea, and then go and join Jonathan in his call. All right. So I wish you all a great weekend, and I'll see you again next week. Okay. Bye, everyone.
Okay.
Bye. Bye.